Hi everybody, and welcome back to Fang Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and Portfolio Management at McNichol & Associates Asset Management. I have recently activated my personal Twitter account, so if you are watching this, you should know that my company's Twitter, SVA Insights, has been tracking the Fangs since earlier this year, and you can follow them as well as watch all the videos. So, if you're a new viewer, welcome. And if you're a returning viewer, let's get right into it. So, the first stock that we're going to look at is Netflix. And a couple of very significant things have happened this week, and the first one is Netflix. Netflix has broken down below its HB3. Remember, we were talking for some time. I've been very hostile towards this stock for some time, kind of waiting for the HB3 technical breakpoint to occur, which was 16 times book value, where I said we might consider a trading buy here, despite the fact that its fair market value is way below the current stock price. Fortunately, the market has taken the decision, as it were, kind of out of our hands, and the stock has actually dropped below that breakpoint and never really gave us a chance to purchase it. Now, what I would expect that will happen now is, having dropped below here, what we would typically expect if I was a pure technical analyst, is I would look for a breakdown and a pullback before continuing on down. As you know, I expect a very low price at the end for Netflix, and I think that that's the way the fundamentals are shaping up. But I wasn't sure what would happen to the HB3. Well, as they say, the market has taken that out of my hands, for which I say, thank you, market. I didn't want to get in and then have to get out right away. Turning to Amazon. Well, you know, the thing is, it isn't that we don't like this stock and like what they're doing. It's a marvelous disruptor. But what's the problem here? Well, look at the technical action of the stock. It broke down, and unlike the last time it broke down, it just was very quick. It has broken down and stayed there. Today, actually, on market weakness, the stock has actually dipped nicely below 1800 now, and I still am fairly confident that we're going to see the HB2 price come up. That is about 12 times its book value. Next stock we want to look at is Facebook, and I mean, look at this stock. Look at it, it's just right there at the MSG price. That's 5.5 times book value. That's what that technical breakpoint is, and the stock is just clinging on for dear life. It's got only about a 20% downside risk, and I say only because that's just about the best of all of the Fang stocks. Alphabet, well, Alphabet continues to hang in. We had when the stock broke down originally, we didn't like it back here, and we warned against that. The stock almost made it to our target. Very annoying when things miss, and has been sort of drifting higher ever since. But I am still looking for the super growth price as my reasonable downside target before I would touch it. And I showed you in the past the very long-term picture of this company, and it's sort of its swing breakpoint, if you like, is the super growth price. Apple, well, we've talked about Apple before. The stock actually stubbornly refuses to correct, despite having two very lousy quarters behind it. and frankly, I will be surprised if things get substantially better. Typically in the past, in fact over the past 10 years, Apple has usually and typically peaked out just about its fair market value, and that's that dotted line. It's a little bit above there, so the stock from a fundamental point of view is a little extended as far as I'm concerned. NVIDIA, well, NVIDIA has sort of played a nasty trick on us there. Originally, the stock broke down. It went right down, by the way, to its bubble price at 7.4 times book value and a very, very powerful technical support level. And that actually where it bottomed some while ago. It rallied, broke down again. And with the kind of the revival of the cryptocurrency movement, as it were, the stock actually not only pulled back up to its HB1, which is roughly 10 times its book value, but it broke out and really essentially gave us a head fake. It didn't last all that long before it failed again. Struggled against the HB1 and then broke out again. Well, is that another head fake? I don't know. But the stock closed today below the HB1, so that will obviate the necessity of me to actually make a judgment. I really didn't want to get whipsawed in the same stock twice. Well, those were the Fang stocks. But we have also thrown in Microsoft because, look at the market cap. That is actually a $1 trillion company as things stand. And of course, besides the breakdown of Netflix this week, the announcement of Microsoft that they were going to do a $40 billion share buyback caused the stock here, as you can see, to pop up yesterday. Today, however, the stock has set right back again. And so we'll have to see what the follow-through looks like. Now, I wondered if this had happened before to Microsoft, so I went back in the history of the company. And what I want to emphasize, by the way, is for many of the companies that we follow, we have up to 35 years of valuation history, and Microsoft happens to be one of those. Well, I wasn't interested in all of the history, but I was interested in the last time that Microsoft repurchased some of its shares. And you can see the effects of the share repurchase here by the fact that what we call the structural lines, the technical lines of the stock were steadily falling during this period. Well, what happened to the stock? Well, I don't know when they made the announcement that they were actually going to do that, but and the stock, I guess, drifted sideways, if you want. There were some trading opportunities, but when we actually got into a bear market for all stocks, that certainly did not stop Microsoft from having a huge fall from grace. I think from about a high of 44 down to 14. So if anybody thinks that this stock buyback is some magical elixir to hold the stock up, I would suggest that you think again and watch the technicals very closely. Going back to our short-term picture of this stock, it has been banging up against its HB1 that is 10 times its book value and has been unable to break through there actually for some number of years. And I think that condition will probably prevail. Anyway, that's it for the Fangs and Microsoft this week. Thank you very much for tuning in. Again, this is Ross Healy. I'm the chairman of Strategic Analysis Corporation and a portfolio manager for McNichol and Associates Asset Management. I hope that you have enjoyed taking a look at our SVA charts, and I hope that you will tune in next week. See you then.